back with another exciting episode of Epicenter, where we feature business leaders who are shaping today's digital economy. And today I'm here with Dr. Sivapalan Vivekarajah. Did I get that right?
Perfect.
Yeah, that's awesome. So for those of you who don't know, Dr. Siva, as he likes to be called, or Doc, is a senior partner and co-founder of ScaleUp Malaysia, which is an accelerator. He's a mentor, an angel investor, an adjunct professor, and an author of 2 books, one which I read and one which I haven't gotten my hands on yet. And of course, I like to call him the godfather of Malaysia's tech and venture ecosystem.
Thank you, Ronen. That's very kind of you.
Yeah, well, I mean, it's true, no?
Yeah, godfather is also kind of like old, but yeah, I've been around for a while.
You've been around for a while. I think you earned that.
Thank you.
So today we're going to talk about supercharging your startup's valuation. But I think as a good prelude or maybe context, because a lot of people probably in Singapore and Malaysia know you quite well. I mean, you've been on the scene for quite some time. But I'm going to guess that the whole Asia or maybe the world needs to know who Doc Siva is. So maybe you can tell us your path of going from where you started to becoming a 1X founder to basically becoming the godfather of Malaysia's tech ecosystem.
Thank you. Thank you, Ronen, for inviting me to be on the show. It's a pleasure to be here with Ronen Mense on the Epicenter.
And we have our own mugs, that's right.
Which I can't take back with me, I'm unfortunately being told.
Okay, I'll give it to you if you want it.
Thank you for having me on the show. Yeah, I've been around for a while. I started off being a corporate consultant. My first qualification was in corporate work. So I'm a chartered secretary in the Commonwealth countries. Every company must have a company secretary that looks after all of the company's legal requirements and stuff. You know, you change directors, resolutions, and stuff like that. So I started off being that. But it got a little bit boring for me. You know, it's paperwork, right? So it got kind of boring for me. So I went into different kind of businesses. I went to many, many different types of businesses, right?
Wow.
Many of which
Tell us.
Many of which failed, right? Maybe the one that'll be most interesting to you was I got into the condom business.
Wow.
Yeah, you probably don't know that as well, right? Yeah. So this goes back a long time.
I didn't know that actually.
Yeah. So during the time when AIDS was quite prevalent, this was the late 1980s and early 1990s, there was a lot of demand for condoms and gloves, rubber gloves, right? Just like during COVID, there was huge demand for rubber gloves. So there was lack of supply, and we started exporting some stuff because Malaysia was a large producer of gloves and condoms. And because there was big demand, me and a few partners got together and set up a factory to do this, right? So that was my real venture outside my corporate consulting work. I still kept it, my corporate consulting, but I got into this.
I hope you weren't doing QC.
Well, I was going to say something else, but
no comment.
No comment. So QC is quite interesting, but yeah. So I got into that business, and like any business where there's huge demand, everybody else wanted to get into the business as well. So when the AIDS epidemic kind of like slowed down, demand actually was not enough, and supply was overwhelming, especially for the gloves business. And it's the same kind of product, right? It's rubber dipped. It's a dipping methodology where you make condoms and gloves. And when the supply was too much, the banks pulled back on all of their finances, and most of the glove companies closed down, just like what's happening now, right? Because of COVID, a lot of people set up glove factories. Now there's no demand, so a lot of them are shutting down. Unfortunately, we got caught in the same thing because the banks just say anything to do with this industry, shut it down, right? They didn't want to finance it anymore. So that was my first major failure, right? So we had to shut down the factory because there was no financing. Literally, if you export anything, banks don't give you any financing. And you can't survive without bank financing when you do exports. So that was my first major failure.
So at least you failed because of funding and not because of faulty condoms.
Exactly, yeah. The condom,
just for the record.
Just for the record, they were good, right? So that was like a major failure, right? We had to shut it all down. But I wasn't happy with that, So what I did was, after everything kind of like settled down, I went and spoke to the bank and I bought back all the machines, right? Because by that time, 90% of the factories are shut down and nobody is going to go back into it again, right? So I went and bought back those machines and I set it up again because I saw that there was demand. Well, I didn't like to fail anyway, right?
Right.
So I wanted to do this again. So we set it up again and we were doing reasonably well. Right. And that's when one of the big glove factories, there are like 4 major players in the glove industry in Malaysia. One of them came up to us and said they wanted to buy us out. Right. So we said, okay. Right. And we sold that. So from something that was a complete disaster that failed, I got back the machines like, 10 cents on the dollar. Right. So we set it up again and we sold it. And so that was one exit.
So you had your first exit.
I had my first exit.
Wow.
So it was a strange day. I never thought I'll exit. In those days when you set up a business, you think you're setting it up for life.
Yes.
Right? Yeah.
Yes.
So I had a first exit. And after that, that's when the whole technology ecosystem started, right? Amazon and Microsoft and all were really doing well in the US. And that's also when Malaysia decided to get into the technology space. So Malaysia was the first government in Southeast Asia, in fact, I think in Asia, that set up a whole hub, a whole small mini city called Cyberjaya, where they wanted to make that the technology hub for Malaysia and actually for Southeast Asia. That was done by the former Prime Minister Mahathir Mohamad. And that was like 1996, 1997. So that was really exciting times, right? So when I heard about that, I was so excited. I drove to the spot, which was supposed to be Cyberjaya. There's nothing there but rubber trees and oil palm trees. So they basically took over huge plantations and set it up. But, in a couple of years' time, they actually had a proper setup. They had offices and stuff. And we had people like Bill Gates and all these people coming down to Malaysia as part of the International Advisory Panel. Those were really wonderful days in Malaysia, So we had all of those things, right? And I wanted to do something in that space. I was bitten by the bug. I wanted to do something in that space. And one of the things was that there were a lot of companies, technology companies, that were setting up because Malaysia wanted to be a technology hub, right? But there was no one helping them with fundraising or anything like that. So what I did was I set up a company to actually bring in investors from outside Malaysia into Malaysia to show them what Malaysia is doing. So I worked with the government and I brought in a bunch of VCs from the US, from Hong Kong, from China, from Singapore into Malaysia. First time they came into Malaysia. And I did the first ever networking session ever for technology companies and VCs in Malaysia.
Wow. So you are the godfather. I'm not joking here.
So, in the US, there are things like First Tuesdays and stuff like this. Goes back a long time, right? But nothing like that in the region. So I set it up in Malaysia. I call it, my company was called 3C Capital at the time. So 3Cs meant connecting capital and creativity, right? And so we brought in all of these people. We had the first networking session, networking at 3 Capital. So we brought all of these guys. So that was really exciting times, right? And then, of course, the dot-com bust happened.
Right.
But in
early 2000.
That was early March 2000, right? The dot-com bust happened. So things kind of like really slowed down in the West especially. But I think in Malaysia, things were still okay. It wasn't too bad, right? So that's when I really got into the space. And one of the things, there are 2 things that really were important. One is there were a lot of entrepreneurs setting up technology companies but didn't know how to build a technology business. And secondly, they all needed funding and there was very little funding in Malaysia. So that's when I got into training and coaching in a way. So I started working with entrepreneurs and I started working with investors to invest in these entrepreneurs. And interesting story, SoftBank's first ever investment in Malaysia was brought in by me.
Wow.
And they invested in a company called Viztel, which was later listed on the Malaysian Stock Exchange. Yeah. So that was SoftBank's, but that was a different SoftBank, right? But it's mini SoftBank compared to what it is today. So that's the kind of stuff I was doing. And then my management company got bought out in 2002. And I decided to go to the...
So now you're a 2X founder.
Yeah, 2X founder, yes.
Oh.
Not a unicorn kind of exit, right? But, an exit is still an exit, I guess.
Yes, that's true.
And actually before that, I also set up an organization called the Technopreneur Association of Malaysia. The first organization of its kind in the region where technology entrepreneurs got together and they have a voice now, right? and the government engaged with the association. The government was looking at policies that would help the startup space, but they didn't know who to talk to. So I said, hey, let me set up an organization like that. I became the first president, and we started working with the government, including lobbying the government for policy and stuff like that. So all this goes back to the year 2000, 2001, and so on, right? And we did well with our lobbying. At that time, there was no early stage funding. So we lobbied the government for grant funding, and we got them to agree to that, and we set up an agency called Cradle Fund. And that agency has now funded more than 1,000 companies with grants.
Wow.
A lot of successful companies in Malaysia owe themselves to the early grants that were given to them by this agency. So, we did a lot of those kind of stuff. And then in 2003, after my company got sold out, I thought maybe I'll go and do something different because I was very interested in the venture capital space. So I went off to the UK to do a Ph.D. in venture capital.
Whoa.
Yeah,
okay.
By then I already had my law degree and my master's degree as well.
So you were already doctor before then. Now you're like a triple doctor.
No. I wasn't a doctor at that time. Yeah. I did my master's, but I decided to go and do a Ph.D. in venture capital.
Okay.
So I went to the University of Edinburgh. There were only two professors who could supervise someone in venture capital. One was in Nottingham, the other one was in Edinburgh. And my chemistry with the professor from Edinburgh was very good. He was a wonderful person. He's still a professor there, so he's a great guy.
Just curious, what does it take to become a professor of venture capital? Do you have to have 6 exits that are unicorns or have X billion under management? I mean, because it's kind of a precarious position that you're getting a PhD in venture capital from a guy who is teaching about venture capital.
Yes.
But have they been involved in venture capital themselves?
So it's interesting, right?
Yeah.
Most of the professors who do this consult.
Okay.
They don't really set up their own venture funds. So they consult with venture funds, they consult with angel funds. So they were quite big in the UK at the time, angel funds. They consult with them. They do research on this industry, right? So they work very closely with investors and stuff like that. So some of them are also even my professor is like an angel investor. He invests in a few things here and there, right? But mostly through research is where they learn how the industry works.
Okay.
Yeah. So I went over to Edinburgh and, we moved there, my wife and I, we moved there and I did my PhD there. Right? So that's like the early part of my life.
Right.
And after that PhD, I came back to Malaysia. And, now that you have a PhD in venture capital, a lot of people say, hey, can you teach us a little bit, right?
Yeah.
Can you train us a little bit? So that's when I got into coaching and training. And at that time, people were still only doing 1-day seminar, 2-day workshops, that kind of stuff. So people will come, they learn, but they don't really implement what they learn. So that's when we started doing long-term coaching programs. So we did 1-year coaching programs, right? You come into our program, you sit down with us for 1 year. We have coaches for you. If you're early stage, we've got other entrepreneurs who are successful to coach you. If you want to raise funds, we've got investors to come and coach you. If you're late stage, we've got corporate people come and coach you, right? So we did that for about 15 years. We've actually coached 1,000 companies and 2,800 entrepreneurs in Malaysia. So a lot of successful companies in Malaysia, came through that program. So people in Malaysia will know things like iPay88, which is one of the biggest payment gateways in Malaysia, Easy Parcel, which is one of the biggest logistics player. A lot of these kind of companies. Signature Market is a very big e-commerce play. So a lot of them came through our program. And we did well coaching them, but we realized then that, we had no equity interest in them. The government paid us to coach them, but when they went on to be successful, we had no interest in them.
No skin in the game.
No skin in the game. So we decided in 2019 to set up ScaleUp Malaysia Accelerator.
Okay.
So we raised funds from individuals primarily, and we invested in these companies, and we did it for 4 years. So our latest batch was this year, and as of now, we have 36 investments in a variety of companies. Some of them have done really well for us as well.
Example?
So we have a company called Earth, which is recycling of e-waste.
Okay.
Yeah, and they just received funding from our sovereign wealth fund, Khazanah, and Gobi Partners, which is very large VC in Asia.
Yes.
They just received funding from them, and I think our multiple on that is already 20x.
Wow.
Yeah.
Okay.
Right. We have a few other companies that did similarly as well. We had one other company called Impact, which is in the fintech space, and Sequoia invested in them. Right. Sequoia's only investment in Malaysia. at that time. I think they have 2 now. So they invested in them, and we had like almost 50x return from that. We haven't exited yet. We're still there, right? But just based on the valuations that came in, we already have 50x return on that. So we have some very nice success stories as well. We have some very good impact companies that were invested in as well, right? We have a company called Kiddo Care that provides carers on demand for parents, right? For children. They also were invested in by a few companies, including Gobi and Kazana as well. That's also doing really, really well. So I think we've been quite lucky in that sense. We selected some really good companies, but we don't just invest and then don't do anything. We work with them, we help them build their business, we help them look at the business models and so on. So we are quite active investors in that sense. Yeah.
So you're active. It's much more than money, right? And I think that's what really founders need, is especially first-time founders.
Yes. Exactly.
Especially young first-time founders, right? Just giving them money is basically like, here's daddy's credit card, go have a night on the bar, right?
Yeah.
So probably that's not exactly the ideal kind of template for success, right?
Yeah. But a lot of our companies, right? I think if we look back on the companies that we invested in, the founders that are actually more successful are those who are in their 30s and 40s. So not so much those in the 20s, right? Yeah. Those in the 20s probably have a lot more to learn. We need to really impart a lot of knowledge to them and our experience. But founders in the 30s and 40s are actually very good. But they might be good in certain areas, not so good in other areas. So we help them in the areas that they are weak in. For example, in talent, in managing people. We get advisors to come in and talk to them about that kind of stuff. Fundraising is something that very few people know about. So we help them in that as well. Right? So it depends on who they are, what their needs are. Then we work with them and help them.
So you've done these accelerators. Now you have this fund that basically is really getting carry in all the investments that you're doing. It's kind of an interesting segue. Malaysia has gone through a rocky period, right? Of on the political side. How many? 5 prime ministers in 5 years? 5 prime ministers
in 5 years.
Yeah. So I don't know any other countries that
I don't think so.
can match that. And now it seems like there's a new dawn with Anwar Ibrahim, right?
Yes.
What is your outlook for the Malaysia tech ecosystem? What do you see is what's promising? Where do you think Malaysia can compete? Not only like at a Malaysian scale, on a global scale, but also, why is it interesting for global companies to also look at Malaysia?
So I think Malaysia is probably one of the best kept secrets, right? Many people don't know much about Malaysia. They know about Indonesia because Indonesia is a very large market. They know about Singapore because it's a financial center, right? Most people don't know much about Malaysia. And Malaysia actually is a great place to start a business. Malaysian governments have always been business friendly. But the current Anwar government is very startup friendly as well, right? They have been very open about wanting to engage with the startup ecosystem. They want to create more startups in Malaysia. They want to make Malaysia a hub for startups in Southeast Asia. And Malaysia actually is a great place to do that, right? Because everybody speaks English, right? So whatever startup you are, whichever part of the world you're from, if you're an English-speaking startup, Malaysia is a great place to do that. I mean, if you go to Vietnam, you have a big market in Vietnam, Thailand, Indonesia, but they don't speak this language as well. There's actually very good talent in Malaysia. In fact, Singaporeans hire a lot of Malaysian talent, for example, right? So talent is there. English language speaking is there. It's not a very large market at 32 million people, but it's sizable enough where you can test out all of your products. Because Malaysia also comprises of different races, different languages, different cultures, right? So if you test something in Malaysia and it works in Malaysia, there's a strong possibility it will work in other parts of
You have a great demographic pool there.
Great demographic pool, right? It's also very business friendly. So you can come to Malaysia, set up a business. There are tax incentives for you as well if you set up in Malaysia. If you're an entrepreneur, you can even set up in Malaysia, get a visa, stay there for 2 years, up to 5 years. So it's very business friendly, right? The one thing that we don't have enough of is there isn't enough funding in Malaysia, right? So this has been a weakness for a very long time. And actually it's starting to get a little bit better. Because in 2019, when one of the governments took over from the previous government that was ruling for about 60 years, they wanted to restructure the whole funding ecosystem because we had too many government agencies that were doing funding. So the minister at that time, the Minister of Science, appointed me as a task force chairman to look at restructuring the funding ecosystem. Because in Malaysia, every time a new government comes in, right, they set up a new agency to do something. One agency to do funding here, another agency to do funding there. In the end, we ended up with multiple agencies doing funding. And it wasn't a very efficient way of doing it, right?
I can imagine.
Yeah, and so entrepreneurs were like, where do I go for this, right?
Yes.
And people say that we have this thing called grantpreneurs because they go and get grants and funding from different agencies, and the agencies don't talk to each other, so they don't know, right? So the smart guys get multiple rounds.
Multiple rounds on the same round.
Yes, exactly, right? So we wanted to restructure that. And also because many of the agencies were not efficient in funding, and they didn't have the right people to do it as well. So they were not funding well. They were not giving a good return to the government. Sometimes the returns were actually quite poor. So they wanted to restructure. So one of my policy recommendations to the minister at the time, we had two major policy recommendations that were adopted. The first one was that venture capital has to be done on a fund-of-fund basis. That means the government shouldn't be directly investing in companies. The government should provide funding, match it to funding from the private sector VCs, and the private sector VCs should do the funding. Right? Because then it's more efficient. They are experts in that field. They know how to do this better, and they have skin in the game. Because they bring in their own money and they have a 20% carry. So they have skin in the game. So the government actually restructured that. And because of that, we had another agency set up called Penjana Capital to do just fund of funds alone, right? And now the entire ecosystem, the entire funding by the government is going via fund of funds. That's showing much better results than the previous ways of doing it. The other thing that was done, our recommendation, is a corporate tax incentive. So in Malaysia, the corporates are actually very rich. There's a lot of cash that's in the hands of the corporates. And we have government-linked companies, public listed companies that have a lot of cash. But they haven't been investing in the startup ecosystem. If you go to places like Indonesia and Thailand, you find that a lot of the families are very vested in the ecosystem. Right? They have a lot of family-run venture capital funds or family offices, corporate venture capital funds. It's not like that in Malaysia. They're a lot more risk-averse. So we decided that if we can give them an incentive to invest, they would invest. So the government agreed with us, and now if a corporate invests up to 20 million ringgit a year in a venture capital fund, or they set up their own venture capital fund, they get a tax incentive. They can write it off their taxes, right? So that's an immediate saving of 25% in taxes. Now we see a lot more corporates coming in to do that. So I started by saying that one of the biggest weaknesses is there isn't enough money in the ecosystem.
Right.
So now the government is starting to do it. Now the pension funds are coming and doing this as well. Our sovereign wealth fund has agreed to invest 1 billion ringgit. That's like almost 250,000 or 250 million US dollars. Our largest pension fund is also doing that, and the government pension fund is also doing that. So now there's a lot more money coming into the ecosystem from the government because this current government is very supportive, and the corporates are also starting to come in as well. So I think hopefully in the next 2 to 3 years, we will solve this problem. So if we solve the problem of lack of funding, we solve a lot of other problems as well, right? Because startups can't hire good people unless they are funded.
This sounds interesting because it's almost like a little bit behind the curve in some ways. And I think given what, this the macroeconomics of the past few years, especially post-COVID, there's been a lot of bankruptcies that are happening, a lot of, down valuations, down rounds. And kind of Malaysia now seems like it's coming in just when things are leveling off and almost might be, I want to say a little bit more immune to having made bad investments of the past. and probably under the right structure, which you mentioned, and creating what I see as like more of an unbiased way of putting money in, right? It's like you ensure that you don't like double dip into the same company, or that someone is investing in their cousin's brother's condom manufacturing business. So that's good. So it sounds like the changes that you've helped to recommend are going to take good shape.
It looks like it.
Yes.
And I think it's also, just like you said, venture capital goes in cycles as well.
Yes.
So post the global financial crisis in 2008, it was a really down round for the venture capital industry, right? It was down.
Yeah.
And then it started picking up in 2010, and it boomed all the way right up to 2021, which was like the peak, right? So 2022, it dropped very badly, right? I mean, market capitalization in US stock exchange really dropped for tech companies, right? They dropped like some of them 70% even, right? Some 75%. So that has actually, caused valuations to drop even for startups.
Yes.
But a lot of VCs raised money in 2020 and 2021. Those are the two best years ever in the history of venture capital, right? So many of them have money, they call it dry powder, to invest, but they couldn't do that in 2022, right? But now that, it's 2023, they have to actually start investing. So we're seeing a lot of Singapore-based VCs, for example, coming up to Malaysia looking for deals. They've invested in some of our companies as well, right? But what I see now is a new cycle starting, right? So it's dropped a lot, and now we see a new cycle starting in 2023-24. And normally the cycles last about 10 years, 8 to 10 years. So if that's the case, this is probably the best time to invest in startups and the best time to invest in venture capital funding. Because even startup valuations are down.
Yes.
Right? They used to ask for ridiculous money in 2021. Very. Right?
I think there's two interesting things that you mentioned. One is that, we've been since really 2008, 2009, everything has been basically up and to the right. Right? And I think that probably for a lot of the younger people who have been in tech or companies that are well funded, for the first time in their careers, they're actually seeing, valuations dropping, layoffs, right, which are kind of still happening in the industry, right? And I think that it's important because this adds a little bit of I want to say like scars, right? Everyone needs some scars, right? And to help build that grit and to understand that not, this world isn't built up and to the right all the time, right?
Yes, exactly.
And I think that's important. And the second thing that you mentioned about dry powder, is it that funds VCs when they are drawing capital, it's almost like they're on the clock, right? To start returning. So we hear a lot of there's a lot of dry powder in the market, but is it that's only dry powder when it's actually sitting in the VC's hands, right?
That's right.
If they're still in the funds, they're not on the clock. So it's actually, there's powder, but they haven't drawn it, right?
Yes. But normally the way VC is structured, right? The fund has a lifetime. So most VC funds are between 7 to 10 years. Okay. So when you set up the fund, you sign up your limited partners who are your investors in your fund. You tell them, okay, my fund life is 7 to 10 years. So if we started, let's say in 2021, it's probably by 2028 or by latest by 2031, they need to exit and close the fund. Right? So with most funds, the first 2 to 3 years is spent looking for deals and investing in these companies. Right? So assuming, let's say it's a 7 or 8 year fund, right? 2 to 3 years is spent investing in companies. So that's where a lot of the work goes in, looking for deals. And then the next 2 to 3 years, you're managing your portfolio. You're managing these companies and helping them to grow and maybe raise more funds and so on. So that in the last 2 to 3 years, you look for exits for this, for your investments, right? And you have to exit, otherwise you can't return any money to LPs. And for VCs in particular, your money, you make your money when you have exits because we have a 20% carry, which means we have a 20% interest when the fund makes money, right? And that only happens towards the end of the fund life when you're actually exiting, right? So they all actually have this clock that's ticking all the time. So if you don't invest in the first 2 to 3 years, there'll be a rush to invest in another 2 years because then you still have to do that whole portfolio management and getting that exit. So if the guys that started the funds in 2020, 2021, the clock is already ticking. It's already end of 2023 now. They should already have been fully invested by now, or at least most of it invested by now. But now they haven't done it, right? They're keeping the money because the last 2 years they didn't do any investments. Right. So that's why they have a lot of money. So now they're coming out here and looking to invest. And it's a good time for entrepreneurs, right? Because VCs have money, they need to invest.
Yes.
And they raise significant money, right? It's not small money that they raise, right? So they need to invest. In fact, Vertex recently announced they raised almost $500 million US. Vertex from Singapore, right? They raised $500 million US. And they're going to invest in Southeast Asia and India. So, and India valuations are down, and India it boomed in India, right? In the previous
boomed and busted,
right? So I think Southeast Asia has great opportunity because I want to point out one thing that you said, right? We never really went through all the pain that the ones in the West went through, because at least in Malaysia, valuation never boomed like they did in other parts of the world. Indonesia, yes. Indonesia valuations were very high.
Yes.
Vietnam as well.
Yes.
Malaysia, Thailand, Philippines, it never happened.
Yeah.
So we never went through that, sky high valuations and big drops, right? So we never really went through that kind of pain. So I think for Malaysia, Thailand, Philippines, it's okay.
So it pays to be in a tier 2.
Yeah, it pays to. So the VCs think that, these countries are tier 2, right?
Yeah.
So tier 1, Indonesia, Vietnam, Singapore companies get higher valuations because they're considered tier 1. Those two markets are fairly big. There's a lot of excitement in Indonesia, Vietnam. Malaysia, Thailand, Philippines has been tier 2. But I think, like you said, right? Thanks to this big drop and everything, we were lucky being in tier 2. Because in Indonesia, all those guys that raised at high valuations are all going to go through down rounds now.
So this is actually the chance for the tier 2 to become tier 1.
Exactly. Wow. Here we go.
This is good, and I want to shift to something that you are super passionate about, and you went so far as writing a book about supercharging your startup and ScaleUp's valuation, right? And I mean, because you're spending a lot of time in front of founders and first-time founders and CEOs, your LinkedIn profile shows that you wear no less than 7 hats, I think it is.
Yes.
So really, you're very, very active in this space.
Yes.
There's something that I picked up on in the description. The biggest cause of failures in angel investment and venture capital deal closure or an acquisition is disagreement on valuation. And the primary reason for this failure is a lack of understanding by entrepreneurs and some angels on how to value your business.
Yes, absolutely. Yep.
Talk to us about this. I mean, founders, listen, this is why you're here, right?
Exactly, right? That's why you're here. So, we have worked with 2,800 founders. And I can safely say 2,799 of them don't know anything about valuation.
Wow.
Seriously. And if they talk to the normal accountant about valuation, the accountant will say, okay, let's look at price-earnings ratio, which is based on your profits. Startups don't have a profit. So that's out the window.
They don't have revenue even.
Yeah, okay, some of them, right?
Yeah.
At the early stages. And then they say, okay, let's do a discounted cash flow. Discounted cash flows only work when the company is more mature and your revenues are more stable and predictable. And you have to predict, for discounted cash flow to work, it's got to be at least 5 years future forecast, right? These startups don't even know how much they're going to earn next month.
Right.
What more next year? How are they going to predict for 5 years, right? Which means it's just pure guess. So you're just going to throw in some numbers and try and find a valuation that works for you. So that also doesn't work, right? So what kind of valuations work? And what if you don't even have revenue at the very early stages, right? Angels invest at the very early stages. If the company is just starting up, they've got a product, they've got a team, how do you value that, right? Nobody has a clue. So entrepreneurs want high valuation, investors want low valuation.
Yes.
And very often they don't meet. So they say, we can't do this deal, right? And sometimes, entrepreneurs also are not professional enough. They don't understand valuations. Maybe some investors understand valuation better, especially like VCs and all of that, right? So entrepreneurs now are dependent on VCs to value them and just have to take whatever they give you, right? So if the VCs value you low and you need the money, you just say, okay, That's because you don't understand valuation. So when I was running all of our programs, one of the things I had to teach all my entrepreneurs is valuation. Because they all say, I have no idea how to do this, right? And if you make a mistake, it can be a very costly mistake, right? If you undervalue your company, it means you're giving up too much equity. If you overvalue your company, nobody's going to invest in you, right? So you have to find a balance where both parties, the entrepreneur and investor, gets a fair valuation. It's not a low valuation or a high valuation, but a fair valuation. And the only way you can do that is if you understand valuation in the first place, right? So this is where we teach our entrepreneurs. There are different methods to do valuation. So if, for example, you have no revenue, how do you value a company with no revenue? You can't do discounted cash flow and revenue multiples and stuff, right? So there are different methodologies. For example, there's a methodology called the Berkus method, right? It was created by someone in America called Berkus, right? And in the Berkus method, you have 5 different elements. You have things like the market, right? Is this going to be a sizable enough market for you to invest in? Then they look at the team. Then they look at the technology. Then they look at the execution, right? So they look at all of this and they value that part of it. So in the Berkus method, it's like you put a $500,000 valuation to each of these elements and you compare them to other companies in the same industry. And if, let's say, in this team is as good as or better than others in the industry, you give them a high valuation. You can only go up to 500,000, right? If you look at the product, what they have done so far, if they have an MVP or minimum viable product, maybe you give them a little bit more. If they are in a market that's really growing and doing well, you give them a little bit more. Then you add up all of this and you look at what the valuation is, right? So by doing that, even if a company has no revenue, no customers, based on different elements, you can do a valuation, right? So for entrepreneurs, they can do it themselves. They can say, okay, I'm going to look at all of this and this is what I think I'm worth. And we tell them, go and speak to other investors, even those that are not investing in you, ask them to value you based on this method and see what they come up with. Then you have a good idea, right? And then when the investor says, oh, I'm only going to value at $1 million, you can say, hey, I've done this. I've spoken to 5 other potential investors and they say I should be worth at least $2 million. So now you have bargaining power.
Yes.
Right? Because now you have done something and you can show the investor, hey, I did this.
Yeah.
Right? Can you look at each of this and tell me that I'm wrong or whatever? So that becomes a bargaining chip. And actually, the other thing is investors will be impressed because the founder has been able to do his own valuation.
Yes.
Because most investors think, oh, these guys have no idea about this. But you can impress them. And then if you're...
Is that why they're called sharks?
Yes, that's why they're called sharks, right? But I have a lot of good friends who are VCs and they're not sharks. They're good people.
But they're rich.
But the VCs are not my friends. They're sharks. Yes. Yeah. So, and then if you are a company that has revenue and is growing, you should do benchmarking, right? There are a lot of providers out there who can provide data about other companies that have been funded, right? Whether it's Prequin, Venture Capital Insights, and so on, right? And the subscription fees are not very high, right? Especially like the one that we use is Venture Capital Insights. The subscription fee is not very high. You just go and subscribe. And you can compare how other companies in your space are doing in Indonesia, in Vietnam, in Malaysia, Singapore, wherever, right? And then you can do this benchmarking. And you can even get data about what their revenue was, what the valuation was, so you can get a multiple. So you know that if their revenue was 10 million and the valuation was 50 million, hey, there's a 5 times multiple. Do this benchmarking. Get your revenue to that stage. And then you can do a valuation. And then when the VC says, oh, you're only worth, 5 million, you can say, let me pull up my chart. I've done all of this work. I've done all these benchmarks. And based on this, at a 5 times multiple, I should be worth a lot more than that. That makes it difficult for investors or the sharks, like you call them, to push down valuations and treat entrepreneurs unfairly. I'm not saying VCs are unfair. There are a lot of great VCs out there, right? They give you a fair valuation. But if they don't, the one that don't do it, you have something now. So this is what I wanted to do with my book, right? I wanted to teach them the different methods of valuation, whichever stage you are at. Whether you're early stage, you're mid stage, you're late stage, you're mature stage, there are different methods to do this valuation, right? So if, for example, an apps flyer, you can easily do a discounted cash flow because you can predict your revenues for the next 5 years.
Yes.
Because you're a more mature company.
Correct.
Right? But when you first started 10 years ago, there's no way you could have done that.
No.
Right? You wouldn't even know what your revenue was next year. You would have
grow
to
as
guess.
fast as possible.
Exactly, right? So different methodologies for that. The other thing that's in the book is a lot of the different knowledge or elements that you need to know about this whole industry. For example, I talk about things like liquidation preference.
Important one.
Important one, right?
Yes.
So what's liquidation preference? If a VC invests in you and he says, I have a liquidation preference of one time, that means when you exit the company, right? Before you pay anyone, you got to pay that VC one time the investment. Now, if they say it's 2 times the investment, it can make a significant difference, right? And then there's participating and non-participating. See, a lot of entrepreneurs listen to this and say, what's all of this mumbo-jumbo stuff?
Yeah.
But it is so important that if you don't know this, you could be losing a lot of money when you actually have an exit. Right? So just to do very quickly, right? So if you have liquidation preference of, let's say, 2 times and participating. So let's say you get an exit of, say, 10 million.
Yes.
And your investor has invested, say, 1 million in you.
Yes.
So if they get a 2-time liquidation preference, out of the 10 million, 2 million goes to them straight away.
Correct.
Now, they only invested 1 million, right? But they're already getting 2 million out of this. They made 100% return already, right? Yeah. And let's say they took a 20% stake in your company, right? So if it's participating means they now get another 20% of whatever's left behind, right? So now out of the 8 million, they get another 20% of that. So they get another 1.6 million.
Yes.
So basically now before anyone else gets any money, they've already taken 3.6 million. Right? So you only left with 6.4. You'll be running like, I got 10 million valuation, but now you're only left with 6.4 to be divided by everybody else, including the founders, right? And if you're a founder, if at that stage, let's say you have 20%, you only get 20% of 6.4. Right? That's like, 1.2 million only for all the hard work that I put in, right? What if the liquidation preference was one time and non-participating? That means either they take one time the liquidation preference or they participate in the equity of 20%, but they don't get both.
Yeah.
Right? So if that's the case...
No double dip, right?
No double dip, right? So if 20 million valuation, they pick one or the other. Of course, one time is 1 million, 20% is 2 million. So they say, okay, I forgo my 1 million, I just take 2 million. Now they've only taken 2 million and not 3.6 million. That's how big an impact liquidation preference is. And most entrepreneurs have no idea. So, they will fall prey to the vulture capitalists, the guys that want to take advantage of them because they have no idea, and they do this. And imagine you have multiple rounds of this kind of investments, right? I mean, if with AppsFlyer, you've raised hundreds of millions, right? Imagine if it was 2x liquidation plus participating, even a 2 billion valuation is nothing for you.
Yeah.
You'd just be paying them back all their money.
Oh, my God.
Right?
I hope our CEO has done better than that. But I'm pretty sure he's quite savvy on that one.
So I think valuation and all the different elements that go along with valuation are super important. Every entrepreneur, whether you're young, whether you're old, whether you're just starting up, whether you're a mature 5-year company, you need to know about this.
And how an important part of valuation is also ESOP, right?
Yes.
How do you determine how much ESOP to give?
Okay. So this is, we had a session recently with one of the ESOP providers, right? All entrepreneurs have no idea about ESOP, right? Employee stock option plan.
Yes.
And now we find that almost every investor that invests, even at a pre-Series A stage, tells the entrepreneurs you have to allocate 10% for ESOP. And ESOP is basically used to reward your employees or management, right? And some people think that they should reward even the most junior employees. Some people think they should only reward management, right? So different people think differently. The consensus is it should be used to reward management and senior people, not all the junior people, right? But some people want to reward everyone that's really...
By the way, we give everybody who joins AppsFlyer ESOP.
Exactly. So it's really up to the founders, right? You can give it to everybody as well, because the whole point of this is to motivate people to do this, right? But primarily you want it to be used so that you can get the best talent at whichever level they are, right? Now with ESOP, if you allocate 10% and you have 100 people on your staff, how many percent do you give each of them? And if you give management people, senior people, like 0.01%, it's not going to make any difference. And especially in Asia, we talk to a lot of entrepreneurs, and a lot of these people say that people just want money. They don't want ESOP.
Yeah, why is that?
Simple reason is there aren't enough exits. Right? In the US, you have all of these exits, hundreds of millions, billion-dollar exits. Everybody becomes a millionaire overnight. In Asia, not just in Malaysia, but in Asia, you don't see that many exits. Even in Indonesia, how many of those startups, the well-known ones, have exited? Very, very few, right? So if they don't exit, your shares are worth nothing.
That's kind of the game you play if you, as an individual, decide to join a startup, right? Mm-hmm. You're basically choosing that path of, I want to be part of something much bigger, and I want to it's not making $1 wage, wage per hour, right? Mm-hmm. You want to invest in your time as well in building something. This is, I think, there needs to be better education, but I guess it happens when there's, more exits.
Exactly, right? So, you can educate people. Mm-hmm. But most people will say, look, I can hold on to this share for 10 years and I get nothing.
Yeah.
My friend has been in a startup for the last 10, 15 years. He's got nothing, right?
Are you talking about me?
You're going to exit soon. But that's a secret, so we won't tell anyone.
Okay.
But, the thing is, there needs to be more exits.
Yeah.
Right? And this is I wrote an article about this, right? I wrote an article that says, are exits the answer to venture capital woes? But also for employees. Mm-hmm. Because if you have no exits, investors that invested in a company also don't get any money back. If they don't get any money back, they can't recycle the money and invest in other startups, right? Employees who get stock options get nothing back for it.
Yeah.
Right? So they could be working for, there's this thing called a 7-year itch, right? Most people work for 7 years and then, they get the itch to move on somewhere else. So if you don't exit in 7 years, right? Some companies will take back the shares if you leave the company within a couple of years. Some of them let you keep it, right? But if you don't exit, there is really nothing. So in Asia so far, because there are so few technology exits, ESOPs don't have the value that they have in the West, in the US. Because in the US, there's a lot of exits. Even mergers and acquisitions, very, very rare in this part of the world.
Right.
So what needs to happen really is there needs to be more exits. There needs to be more IPOs, and people need to I made $1 million. I'm just a lowly employee and I make $1 million. When everyone starts saying that, then everybody else is going to say, I want my ESOP too.
Yeah, well, you need to show liquidity from these pieces of paper, right?
Exactly. Yeah. Otherwise, it's just a piece of paper.
Dr. Siva, what do you want your legacy to be?
You didn't ask me this question before.
No,
this is the first time
I told you I was
going
to ask you something that I wasn't going to tell you.
I spent the last 24 years of my life in the technology space, right? I've spent most of my life helping entrepreneurs. I've worked with entrepreneurs, helped them to build better businesses. I work with the government to come up with a lot of policy to help the entire ecosystem. I mentioned corporate tax, I mentioned grant. I also help the Malaysian government to come up with angel tax incentives, right? So now in Malaysia, if you invest up to 500,000 ringgit a year, that's like about $125,000, you can get it written off your taxable income. So that's brought a lot of angels into the ecosystem, right? So all my life, I have worked in helping entrepreneurs, helping the ecosystem, helping the government to build better ecosystem for startups, entrepreneurs, and VCs even. With my corporate tax incentive, a lot of VCs are now going out there and talking to corporates and saying, hey, there's a corporate tax incentive, invest and set up a VC fund. There's a lot more interest in it now. It wouldn't have been there because many of the VCs tried to raise from local corporates. There was no interest. In the last 10 years, maybe only 3 or 4 corporates have ever invested in a VC fund in Malaysia. The pension funds never got invested in VC funds as well, right? So what I've tried to do is to build a stronger ecosystem where entrepreneurs are better educated, they are smarter, and they can build better companies. I've also tried to build an ecosystem where funding is more easily available, whether it's grants, whether it's angels, whether it's venture capital, so that there'll be more money available for entrepreneurs to build better businesses. And if it all comes together, and I hope it does in the next few years, if it all comes together, the Malaysian economy will be a lot stronger. People will earn a lot more money, especially in the technology space. And I think that will be better for the country as a whole. So I think hopefully my legacy is that I've done enough for this ecosystem to be just remembered as there was that guy called Dr. Siva who did something for the ecosystem, and he had to do this, right? And if we can do that, maybe that's a legacy I leave behind. That someone did this, I did that to help all of you to grow and to do better. And when the VCs raise money from corporates, I can say I did that too. If it wasn't for that, you wouldn't be getting this money from corporates. So that's really the legacy I want to leave behind. Something better for the startup ecosystem in Malaysia.
You are that real trailblazer, right? You're taking the path of paving the dirt road for a lot of founders, and I don't think it's stops in Malaysia, right? I think that there's a lot that people can learn from your experience and the path that you've taken to help better their own countries and economies that they are participating in. And I almost feel a little bit incentivized myself to try and think what else I can do to help other founders and people in the tech industry besides doing this silly little podcast of
You're educating people. That's important.
Wow.
That's one part of this whole equation, right? Educating people.
You're the one who's educating. I'm just doing the platform. Yeah, that's amazing. And I think, when I call you the godfather of Malaysia tech and venture, I think you really
Thank you.
You wear that title well. Before we wrap up, I love doing quick fire rounds. Are you down with that?
Yeah, sure. Why not?
Yeah. So, must-read book for any founder besides yours, which we will put the links in the show notes. Yes.
Yeah. Must-read books.
Yes.
Okay. I've read a lot of books. So, what would I recommend as a must-read book? I think there was a book on innovation by Christensen, Dr. Christensen, where he talked about, innovation itself, how you should innovate and how you should build businesses around innovation. And I like innovation because innovation is not just about creativity. It's not just about ideas, but taking ideas to commercialization, right? And I think he wrote a great book about innovation. I think that's one of the books that's a good read. I've read a lot of books on investments as well. I think no particular book, but if anyone wants to know about how to build a great company, they should read books about investment. There was one book called Money for Invention or something like that. Yeah. I think that was good. That's about the venture capital industry. So I just read a lot of stuff. So I think any of these books are really great for them. Yeah.
Chocolate or durian?
Absolutely durian. I love chocolate as well, but I'm a Malaysian. I won't be much of a Malaysian if I don't like durian, but I love durian.
If you could have unlimited supply of one thing, what would it be?
Anything?
Anything. But of one thing.
Love.
Wow.
Not just love between man and a wife or a husband and wife or whatever, but I think the world needs more love. There's a lot of hatred and animosity and anger out there today, especially over the last few years. I think, people need to demonstrate more love, whether it's to your spouse, to your family, to your friends, I think we need a lot more love. It seems like we're going back to the 1960s or something like that.
Yeah.
I was born in the 1960s, so, I think we need a lot more love.
You're a flower child, huh?
I'm a flower child, yes.
Yeah, I think love and gratitude is very important.
Gratitude, absolutely. Yeah.
So, Grab, Malaysian success story or Singaporean success story?
Absolutely Malaysian. The Singaporeans stole it from us. I think Vertex invested in them, and Vertex it was funded by the Sovereign Wealth Fund, Temasek of Singapore. And, I always say that, it's like bees to honey. The honey is the venture capital funds available in Singapore. And, they use that very well. If they invest in you, you have to move to Singapore. But Grab was founded by Malaysians, started in Malaysia, And absolutely it's a Malaysian company.
I guess if you're successful in building this Malaysian venture capital ecosystem, they wouldn't have gone to Singapore.
Absolutely. So we're trying to prevent that from happening.
There's your challenge.
Yes. We're trying to prevent that from happening.
So who is the next Malaysian unicorn?
So, we have a unicorn in Malaysia called Custom already, right?
Yes.
But I like another company called Aerodyne, right? They do drones, but their drones are AI-built drones. It's all about data. So what they do is they work in the oil and gas industry, for example, and their drones are used to look at oil and gas structures, for example, measure those structures, see whether they move a little bit out of order or whatever it is, and provide reports to oil and gas companies about, what's happening there. They're a global company, right? They started up and built it on their own with no venture capital funding. That's really impressive, right? Now they're all over the world. They're in the Middle East, they're in South America, they're doing a lot of work. They will be the next unicorn. And I think they'll be a great unicorn because this is a tough business to be in.
Tough to crack too.
Yes, tough to crack as well. And they've cracked the global business.
Wow.
Yeah. So I'm impressed with them.
That's amazing. And most inspiring person to you? You don't need to say me. I won't feel it.
Most inspiring person. I don't know. I mean, it might sound like a cliche or something like that. But I think my wife, because we've been through some tough times, like the company that condom company that closed down. We've been through some really bad times, lost every single cent I own, right? Owed people a lot of money. She stuck by me.
I'm not giving out your email address.
I mean, I think she stuck by me. And she's always had faith in me. So, yeah.
Lily, this is for you, huh? This is for you.
I probably get more chocolate and durian after this.
Yes. We'll make sure of that. Dr. Siva, this has been an absolute pleasure. Thank you for having you on Epicenter, and thanks for sharing your knowledge. And I think there's so much I've learned from today, and I'm going to put in the show notes the links to your books.
Thank
because
you.
I think this is something any founder, actually almost anyone in business, needs to have it, right?
Absolutely, yes.
It's like a good reference book, and can always be learning.
Yes, it's a reference book. Yeah, you keep going back to it. Yes.
Yeah, this has been wonderful.
Thank you so much, Ronen, and thank you for having me. It's been a real pleasure. I really enjoyed this conversation as well. Thank you for giving me the chance to tell my story as well.
It's a beautiful story.
Thank you.
Keep writing it.
I will.
All right.
Thank you so much.
Bye.